Hi there. In this video, we will continue talking about the auditing of cash cycle. In the previous video, we talked about the types of cash accounts and the audit procedure on the cash accounts by working on the bank reconciliation and make sure that the beginning balance plus the deposit in transit minus outstanding checks are equal to the edited final balance. And in this video, we will talk about another issue that might happen from the company. We call it cash kitting. What do we mean by cash kitting? The receipt and the disbursement of the cash might happen in two different periods. For example, the cash payment might happen at the end of the year, but the cash receipt will happen at the beginning of the following year. And this will affect the cash balance in both periods. Or the opposite, the cash receipt will happen in the prior year, the cash payment will happen in the following year. And this also will affect the balances. So we need to work on that because in the assignment, there are a few exercises that they talk about the cash kitting. So here is, for example, the disbursement that happens from different bank accounts in years 2016 and 2017. And on the second side here, you see the receipts for the balances that happens in 2016 and 2017. Where is the cash kitting happens and what is the result? For example, if I take if I pay or the one bank account make the payment in 2016, but the receipt happened in 2017, what will happen? It will understate the balance because we paid. So the balance will be reduced, will be understated in 2016, and it will be overstated in 2017. Of course, you might wonder, why do we need to do that? If we have extra cash in 2016, we make a cash kitting like this to reduce the cash and use it in 2017 because we don't know what might happen in the next year. So to make a cushion for us to protect about any unexpected circumstances in 2017, we do this cash kitting. So if the disbursement happened in 1 year and the receipt happened in the following year, it will understate the cash in the prior year and overstate the cash in the following year. The opposite might happen, that you might receive the cash in 2016, but you pay it in 2017. What the result will be, it will be quite the opposite, where in 2017, it will be overstated because here the cash receipt happened in 2016. And it will be understated in 2017 because the payment happened in 2017. What will happen if the payment and the receipt, they happen in 2016 in our books, but in the bank, it was paid in 2016 and it was received in 2017. If the payment and the receipt in our books are correct, this means the cash is properly stated. So first, we care about our books. If we make changes in our books, then we might have overstatement or understatement. But if the changes happen in the bank accounts, but our books are correct, then there is no problem. The last one, if the cash payment happened in 2017 and the bank payment in 2017, but the receipt happened in 2017, but the bank receipt made it in 2016. So everything, as you can see here, it's in 2017, except for the bank receipt, it was in 2016. This will create a problem by making 2016 overstated and 2017 understated. You might say, why? Because if the bank receipt happened in this year, it will show up in the bank reconciliation, which will end by overstatement because it's bank receipt. So it will increase the balance of 2016 and decrease the balance of 2017. And I'm going to show you 3 different exercises here that discuss this issue of cash kitting. Let us take a look on the first exercise. Here, exercise 3, because in the previous video, I had exercise 1 and 2. So this is the third one. And here, it's a very simple multiple choice question. It says, which of the following cash transfer is most likely to result in a misstatement of cash? If you please can stop my video for a minute, read the 4 situations, and try to figure out which one is the right one. And let me give you some hints because it's the first exercise. Here is the disbursement, and here is the receipt. Here is our books, and here is the date for the banks. Look here, in my books, the disbursement and the receipt, they happen in the same year. The bank also, they happened in the same year. So I don't think there is any problem here because both payment and receipt in my books are in the same year. Both payment and receipt in the banks are in the same year. Even if my years and the bank's years are different, that's fine. The second one, the disbursement in our books was in 2008, but the receipt in our books was in 2007. So we pay it in the following year and we receive in the prior year. This will make 2007 overstated and 2008 understated. Now let us look at C. Here the payment and the receipt in 2007, the payment and the receipt in the bank in 2008, similar to A, so there is no changes. D, the payment and the receipt in 2008, the payment and the receipt in the bank in 2008, so there is no problem here. So the answer should be B. Now let us look at another example, and here it's a big long. Well, you can see here the bank accounts. From one bank account goes to another bank account. Here is the amount, and here is the date dispersed in our books, and here in our banks. And here is the date deposit. Let us look at the first one. The payment in our books in 2020, the receipt in our books in 2020, the bank accounts are in 2020. So what is the result? The result is that cash is properly stated. Why? Because everything in the same year. The entire transfer cleared prior to the year end. Let us look at another one. The payment in 2020, the receipt in 2020 in our books, the payment here in the bank in 2021, but the receipt in 2020. Here also, the cash is properly stated. Why? Because both our books account are the same, and here in the bank receipt is the same. So what about this one? It will not show up in our bank statement until next year, which means it's not going to affect our auditing financial statements for the year of 2020. So the cash amount is properly stated in our books. Let us go to the next one. Here in the payment, it happened in 2021, but the receipt in 2020. So this means the cash is overstated because the receipt here happened in the prior year. And in the following year, it will be understated. Go to the next one. So the cash payment here happened in 2021, but the cash receipt in 2020. So the cash also is overstated, similar to the previous situation because it was recorded in the prior year. Go to the next one. Here, the payment and the receipt in 2020, the payment and the receipt in the banks in 2021. So here it's properly stated. Go to the next one. Here, the payment in 2021, the receipt in 2021, the payment in 2020, and the receipt in 2021. So here we say properly stated, similar to the previous one that happened here. So if the payment bank is in different period, it should not affect our cash balance. The last one, the payment in 2020, but the receipt in 2021. So this will understate our cash in 2020 and overstate it in 2021. Let us look at another example, exercise 5. And here we see different accounts and amounts in 2 different years. Let me enlarge this section to show you. So here it is. So the payment happens in our books in December 31st, and here the books, the receipt in January 3rd. So here it will be understated and here overstated. So here in this year, it's understated. Go to the next one. The payment happened in December. The receipt happened in December. The payment happened here in January, but the receipt happened in December. So here we say it is properly stated. So remember, the bank payment doesn't change our balance. Next one. Here the payment in January, the receipt in December. So this year it will be overstated. So here it is overstated because the cash receipt in this year. Next one. The payment happened in January. The receipt happened in January. The payment happened here in January, but the receipt happened here in December. This is going to show up in the bank reconciliation and it will make the cash overstated. Finally, here, both payment and receipt in December, both payment and receipt in the bank are in January, so it's properly stated. Now, let us talk about another issue, which we call it lapping of cash receipts. Lapping means we take the cash from one client and we put it for the account of the other client. Let me show you how we can make the lapping. And lapping is a fraudulent act that usually the auditor can find it out by checking the serial number of the cash receipts and the recording of the cash into the client's account, and we can figure out the lap. So for example, in July 1st, the accountant collected $300 cash from a client called Baker, and he kept the $300 in his pocket. Fine. Then he collected another amount from Charles, $414. He recorded the amount from Charles normally. So the lapping in cash didn't happen in Charles' account, it happens in Baker, where he took the 300, kept it in his pocket. Now in July 2nd, he collected 300 from Jones, but he recorded the amount from Jones as collection from Baker, 300. So if you check Baker's account, yes, there is 300, but the 300 didn't come on July 1st, it came in July 2nd. So as I said, if we check the serial number of the cash receipt and the date, we can figure out that 300 has been here recorded in the collection in July 1st, but it was entered into his account on July 2nd, which means the accountant might get access and withdrew this cash. Then go to the next one. Smith, 52 recorded, so there is no problem. Then we go to the next one. We got 630 from Herbert. So we recorded 300 for Jones, as you can see here, and we kept the 330. So you can see that the accountant kept in his pocket $630. And then from Nelson, he recorded normally. So here you can see the actual cash is different from the recording, and the accountant kept the $630 in cash. The lapping might not be easily figured out if the accountant returned all the cash that he took it. If he returned it back to the accounts before the end of the year, then everything might be fine. So lapping of the cash might go like this year after year, And the auditor can find it out by checking the receipts number and the dates of the receipts. I hope you find this video useful, and I will talk about other exercises in the coming video. Thank you. Bye-bye.